Okay, so you sell the company to Acer, and I think you made a good amount of money from that time. And Gail's probably happy, and you're at that point.
I told my wife when we went public, I said, this is not a normal business trip. The company's going public. And the day after we went public, there were a lot of articles in the paper. We had a huge run-up in the stock many years ago, but a huge run-up at the time, so it was well publicized. People were stopping her in the market. The bank called to say they got a very large deposit. She goes, well, what are you doing back there? I said, I told you we're going public. It's not a normal week.
That's great. And then what did you do next?
Then I was kind of tired of hardware, so I wanted to get involved in a company using a software business model, i.e. high margins. I was intrigued by that because in the hardware business, you're always dogged with low margins. So I acquired a company in the training sector called Personal Training Systems, ran that for 5 years. That was venture backed by Sigma Partners, and we ultimately sold it to a NASDAQ company.
Mm-hmm. And I think that was a pretty, as Bill Campbell, your friend, says it, that was a pretty lucrative exit for you as well.
That was a lucrative exit, but very trying times, because I found out that the training industry, for the most part, is a cottage industry, and it was hard to make big deals happen. It was hard to get the deal with a big publisher, and that's kind of what I enjoyed.
And then about that time, you were starting to dabble. How did you get into angel investing?
Well, after Altos went public, I probably invested in about 2 companies a year. But then when I took a sabbatical, I actually advised and went on some boards and got more active. And then after selling Personal Training Systems, I had about 10 angel investments that I had made, and I said, hey, I want to go make this my next career, just angel investing. And I teamed up with Ben Rosen, who's here in New York. He was the chairman of Compaq at the time, and Ben and I co-invested in about 30 companies before we started the Angel LP funds.
So he was in New York, but he was partnering with you to do deals in California?
Yes, yes. He wanted to, this is back in 1993. We both had the gray hair that we have today, but both of us agreed on one thing, that, and in 1993 this was a radical thought, that, hey, this internet is the future. This is going to be huge. So let's just go find internet companies, and most of them obviously were in Silicon Valley. So I would actually invest on Ben's behalf. He'd come out once a month and see what he bought. And we never,
and was he happy?
We never had a disagreement.
Okay.
We ended up with stock in Ask Jeeves and Kana Communications and many other great companies. So it was a great experience. But we were investing so actively, we had to start, a regular VC fund, which led to starting the angel funds in 98 and 99.
Okay. So on the graph there, you have a copy of this, basically plots sort of 1994 to today. And as you can tell, in 1995, you sold PTS and then started investing full time. You invest in Ask Jeeves with Ben Rosen. And then you start raising these 2 angel funds. The angel fund 1 was 30 million. The angel investor 2 was 150 million. And I think you invested in a lot of companies.
We invested in 225 companies. But we told the investors we're going to invest in about 250 companies. We're going to take a portfolio approach to investing across all internet sectors. So we're very focused on the internet, but we were going to make a lot of bets.
And who were your LPs for that?
Our LPs were all, for the most part, internet entrepreneurs themselves. So in 1998, Netscape had gone public, Yahoo had gone public, Amazon had gone public, eBay had gone public. We went, and think about it, those entrepreneurs who started those companies, Mark Andreessen, Pierre Omidyar, Cherry Yang, entrepreneurs, just like the people in this room, would call those very successful entrepreneurs and say, you know, teach me how to be an entrepreneur. Well, they couldn't do that because they were running their own company. So we went to Mark Andreessen and Jerry Yang and Pierre Omidyar and people like that, Jeff Skull, the co-founder of eBay, and we said, we're going to start a fund. Why don't you invest in the fund and then refer your deal flow to the fund, and we'll make sure that your deal flow and your friends are taken care of. And it worked out beautifully. So it was internet entrepreneurs investing in internet startups, successful internet entrepreneurs. So it was Mark Andreessen and Pierre Omidyar reinvesting in new startups in Silicon Valley. That's what we wanted to create, and that's what we did.
And it was also, you know, to borrow a phrase from Kleiner Perkins, you had sort of a Keiretsu type of effect where the individual LPs were not just investing money, but they were expected to help with relationships and introductions.
Yeah, absolutely, because at the time, a lot of our companies wanted to partner with eBay, Yahoo, Netscape, and we had, our investors were from those companies, so we had very good access to go form partnerships. And the companies that we invested in, keep in mind, we invest in 1 out of 40 companies that we look at. By the time we vet out a company and make an investment, Yahoo, Netscape, and eBay probably should have known about those companies, and we were their radar system.